All right, let's dive into it, not waste any time. The inflation report we got this morning, oh my gosh. Core inflation, above expectations. We get core inflation come out higher than expected. We got the year over year headline inflation higher than expected. US inflation rate came in just, month over month came in right in line. Core inflation year over year came right in line. But we got these two higher than expected prints. So let's go through this. But the question is, why are stocks positive today? Why is the VIX down? Why is volatility down? Why are bond yields actually pulling back? Let's dive into it, not waste any time. First off, right, we all know that core oil is pushing up headline CPI and it's kind of leaking into transportation. Here's oil, it's leaking into the transportation services, right? Obviously, airlines are up because they use oil, services go up, right? Any transportation costs that have to use gasoline are going to go higher. So that's not really a surprise. The market isn't so surprised by that. That pushed up the core, right? But, that's not actually housing. It doesn't really touch housing. So let's go forward. Shelter inflation, right? Here's the positive. Here's why the market is positive today. Shelter inflation is falling. We actually had we dropped 0.4%. This was the biggest drop of the cycle for shelter. And we all know shelter is lagging. It is a lagging indicator, and it's going to take time for it to continue to fall, right? The Zillow rents will lead the shelter prices, or shelter inflation in general. Prices are a little different. People get confused about that, but shelter inflation is coming down. Big drop on shelter. Super core. All right, let's remove shelter. This is services excluding housing year over year. What do we see? We saw the biggest drop in 28 months, right? Almost 2.5 years. Biggest drop in almost 2.5 years, back down to April of 2021. And super core is falling, right? Super core is falling. We've been consolidating here at 3. Next print should come in the 2s, right? Or maybe a little lower. It's kind of stuck here, but super core inflation coming down. All right. Now, if we annualize, right? If we go ahead and look at core inflation, that's what the Fed's focused on. If we go ahead and annualize that, we know the 12-month is at 4.3%, came in as expected. But if we look at the 6-month, right? So the last 2 quarters or the last half of the year, you're at 3.7%. If you look at the last quarter, the last 3 months, you're at 2.7%. So core inflation is almost at Fed target. If you're looking at the last quarter, the Fed is watching this, the market is looking at this, and that's where the market is positive today. If we go over food, rent, services, right? This is food falling, okay? Year over year inflation, rent falling, coming down. We know that. Services coming down, right? All the inflation indicators are falling. Although we know oil is up. Yes, oil is up, but the market sees that. The market can price that in real time. And right now, it's not concerned with oil. It is not too concerned with oil because we know that demand is not really that hot right now for the market, right? Demand isn't that hot. So oil coming down, the market isn't pricing in oil just exploding over 100 unless you get some real issues. And you see OPEC still trying to cut production to keep those prices up. They have to do this because prices will collapse if they don't. All right. So again, all this inflation data is coming down. Services, super core, that's all falling. The month on month data was a little volatile because of oil prices going into services, but now the market is pricing in no hike. Okay, this is the biggest difference we've seen this whole month, which is after today, the rate hike probability dropped from 8% yesterday down to 3%, 97% chance there's no hike for the meeting that comes in about a week, right? Next Wednesday. I think it's next Wednesday. Yeah. Right. So what do we see? Treasury rates or the bond market right after CPI is released sells off. So US Treasury yields come off, rates come down, right? NASDAQ volatility makes a new low, makes a new local low here. So you can't really see it, but NASDAQ volatility is coming down. And that's pretty much the inflation report there, right? You can dive in a little deeper, but here's what we pretty much know, right? Here's what we know looking forward, just looking into it. Inflation is coming down. Yes, housing is the thing that the Fed is focused on, and we're seeing that shelter inflation is rolling over, led by rent inflation. Okay, the housing prices are kind of stabilizing, and people say, "Oh, well, housing prices are still up." Well, you don't want deflation because that actually takes away your GDP. That actually decelerates GDP, right, to some degree. So, in general, the things that the Fed is focused on, the core stuff is falling, other than services. Actually, you know what we missed? we missed the breakdown. Actually, let me throw this up here. We missed the breakdown of the components. That should have been up. So let me break down the components really quick. Let's get those components in there. I know I had the components ready. I guess I missed it. Shelter components. All right, so here's what we're gonna do. We're gonna look at the actual data and those components. I have it right. Where is it at? Components. Actually, here we go. Here's the components, right? So let's look at the components here, kind of going on. This is the year-over-year data, right? In red is the previous month. In blue is August. So this is the August read. So yes, CPI went up, right, from 3.3 up to 3.71, driven by gasoline prices. It actually went a little higher than I thought it would, but hey, that's fine. I was wrong about that. Food and beverage came down, right? Food and beverage came down. People are spending less at restaurants. Inflation. Boy, I went out the other day for the first time in a while to eat, holy smokes, a burger was like 15, 17 bucks. Are you kidding me? So people are like, nah, I'll just go to the grocery store, right? Energy prices, here's what people don't understand either. Energy is still negative. Energy inflation is still negative. It just recovered from a deep negative position, but it's still negative. Energy is still negative. It's not positive yet. Core CPI from red to blue, right? From red to blue also dropped. This is the big one that the Fed is focused on. Used cars and trucks, right? Also went more negative. Used cars and trucks still falling. So I mean, from red to blue, you're looking at it, it's declining still. That's another big component of inflation. New cars also down, shelter also down. So this is a good report. Yes, transportation services are hot. That's coming from gasoline. No surprise there, right? So now flipping to the market, how's the market digesting this, right? And what we see today, oh, Tesla, yeah, because I'm watching Tesla right now. I'm looking for an entry. We have PPI tomorrow, but I'll be checking that out. So bond yields, right? This is the bond yields are the rate. This is the bond market. This has been tightening the market for the most part, and bonds are coming down, right? Bonds are starting to ease. The VIX is going nowhere. The VIX made a new low. What do you get down to 1340? I mean, not a new low, but the VIX is not going anywhere. It's not. Nothing's really popping off here. And we look at the S&P in the intraday. Oh, we just got a sell off. Okay, so now the S&P is pricing in, right? It had a nice pop. So the initial move is what's important for me. The initial move, we probably move sideways. We have another report tomorrow, PPI, but for the most part, the market is not, it's not falling. It's not falling apart. What it's doing is saying, okay, what are the big risks? What do we got to price in now? What are people pricing in? What is the Fed going to do? It's not pricing in a hike. So can prices go lower? Sure, but we're at the big level, right? If we go to the daily chart, we're above 444. So we could easily still be holding. Oh, let me take that money market fund liquidity off. We could still be holding as long as we hold 444. That's the big pivot point for S&P, right? 444 is a big pivot point. You can see that we are wedging even tighter now. Very tight wedge there. We'll see how it plays out, but I think it doesn't play out till Friday, maybe even Monday, as it digests the PPI, the producer prices, going into Monday. Asking for a friend. I'm bullish. Hold on, I missed what you had said. What did you ask? Would you ask here? I guess I missed it. Big man's coming. I don't know what you said. Oh, moment. Are you asking for a friend? Well, what did they say? Can you repeat that? That's why I say put the comments on YouTube, because the feed, there's a bunch of people jumping on. I missed the feed. Chase, last hour is crucial for technicals. Yeah, last hour is crucial. I still don't think we dropped 444, right? That's the level you're really looking at for the S&P SP 500 is 444. For the Qs, it's 373, and we're positive so far. And the real telltale here is volatility is down, right? You're not getting a spike in vol. You're not getting risk off. You're not getting insurance against S&P 500 because the core is falling. That's what the Fed wanted to see, is that core fall. So the market, right? The market is much smarter than any individual. I was wrong. I thought not core. I thought headline wouldn't have been this high. I was wrong, but the market's like, we don't really care because we can see oil prices are clearly driving inflation here. Also, okay, oil's up. Well, guess what that does? That also increases energy EPS for energy at the same time. Okay, so earnings might be better than expected. At the same time, we are getting news that the consumer, the low end consumer, not the high end consumer, the low end consumer is going to slow on their spending. They're going to be slowing on their spending. There's delinquencies happening, right? And everybody thinks that's a market event that, oh, the economy is going to collapse. There's no collapse coming unless you get no jobs, right? Unless jobs really start to collapse. Expect unemployment to go up to 4%. What does that do for the market? Yeah, we'll go over PPR. What does that do for the market? If consumers slow down on the low end, well, it's more chances that the Fed is pausing or even cuts rates. It starts pricing in another rate cut in the future, not anytime soon, but the market wants it. I think the reason the market is up, regardless of these numbers, is because it priced in the recession in 2022, right? The well, I don't want to go over the ISM, but the market priced in a deep recession. So the pain, it already priced in slower growth, right? And so as these inflation numbers come in better than expected or making progress, the market's going to be okay with the slowing growth economy. It's already priced in the recession. That's my view, right? That is my view. S&P sold off 27%, NASDAQ down 38%. That was the biggest drawdown market cap wise. The whole bond market fell apart. Crypto went down 80%. The market priced in the recession already. So the big factor here is, okay, we priced in recession. Is there going to be progress on inflation so the Fed can ease a little bit and front run those numbers and actually cut rates? And people forget when the Fed cut rates back in 2018 in December, which I think they're actually going to really pause or cut in this December, possibly. The market went higher, it didn't go lower, right? So keep that in mind there. But inflation numbers are for shelter anyway are starting to improve here, and yes, the economy is in a rolling recession. So there's weakness in the economy, but I think it goes higher anyways, right? Will tomorrow's core PPI be what everyone's waiting for, and then we finally get the explosion in one direction or the other, Laguna? Yeah, I think so. I think so. I think we're coiling right now. The S&P is coiling. It is coiling up. You can see the wedge is forming right now. So there's a big coil, right? And maybe PPI comes out bad. Maybe that what is it? The oil prices, the services, maybe that plugs into inputs and really hurts the numbers coming in tomorrow, and we come back down to 438. That is a possibility, but we're still in the bull trend here. We're still in the bull trend. I don't think PPI is going to make a big difference going forward. It's really the core CPI. What is the Fed going to do? It's all in the Fed's hands right now. The market is in the Fed's hands because the market already priced in recession. So it wants to say, well, are you going to ease into the future, right? What we also see here is that, 10-year yields are easing. Look at that big capitulation off the highs, right? You saw a sell off. This is when it goes up, when yields go up, you're selling off bonds. So we got rejected there. Why? Because more money market liquidity is coming in, RRP, even higher, right? This is why I think we're going to stay bullish here, because that money's either sucking up treasuries, lowering the cap on yields, the cap on rates, and the Fed is near pause here, shelter is coming down. And then at the same time, if that money is going into other markets like S&P, right, or Qs, or who knows where it could be headed, but it's moving higher. Last time we got this, right, there's a big blow off top. So I think at the end of the day, we're going to blow off top to the upside. Tom Lee was showing that this year, out of 4 out of 6 inflation reports, even though the inflation was higher than expected, the market still went higher following that 4 out of 6 times. So that's just a correlation event. But what it tells you is the market is still stronger. It's still resilient because it's seeing earnings estimates pick up. It's seeing that inflation is making progress, even though it's slower. It can already see that it's coming from oil, right? We also have the dollar, right? The dollar hopefully starting to find some resistance here, right? Looking at the dollar, there's some bearish divergence. It could keep going higher, but you're getting some bearish divergence. Not really, buying pressure is not picking up. Price is still higher. So if the dollar rolls over, that's going to fuel equities. That's going to fuel equities to some degree. If we get that probably won't come off until we see oil sort of slow down a little bit. And I know there's people that think oil goes to 100. Maybe it does. I've been wrong about that, but we just got to keep track. If oil goes higher, that takes money out of the pockets of, and you have student loans coming back online. That's not systemic risk to the global economy or systemic risk to GDP, but it does slow the economy, right? Payrolls got revised lower. So spending will come down, and the Fed will start to signal, okay, we're looking at cutting into the future now. We can look at cutting at some point, or just, pausing. And once you pause, well, liquidity leaves the reverse repo and starts going into the market because lower rates or capped rates. Now these high growth companies, Apple, Amazon, Microsoft, Google, Netflix, the companies who can grow way faster than your interest rate at 5%, they're going to start catching the bid because now they're certain, they understand, okay, this is it. This is as high as the Fed's going to go. The bond market starts to ease and we go higher from there. That's my outlook looking at it. Okay. So, Chase, that's about SMCI stock, super micro. Let me see, SMCI. Thoughts about MCI. Yeah, I know this thing's been moving for a while. I can only do some technical analysis on it. Um, I don't have a whole lot of thoughts on this stock, SMCI. Let's see, what else do we got here? TikTok again. If you're on TikTok, we have the charts live on YouTube. I cannot. You get lost in the feed, so you could throw your comments out there. Just keep spamming them if you have more questions, or jump on the YouTube stream. I can see your comments there. Do you know how TQQQ is taxed long term? I have no clue how TQQQ is taxed. My guess is you're going to get taxed either long term if you hold it. If that's an inverse ETF, you're probably not going to hold it for a year. So you're probably going to get short term taxed on it 30%, somewhere around there, right? But I don't know the tax structure. I'm not a tax expert when it comes to these different. I don't think it's much different. You're going to get 30% on short term, somewhere around 30%, right? 25, whatever, depends on your tax bracket. So that's what you're looking at. So super micro computer, this thing has been exploding significantly. When we look at the technicals, just look at the moving averages where institutions coming in at. Looks like it's slowing down, but I do see a reverse, sort of a cup and handle here. It is looking nice. You get a little cup and handle at this point. Let's see. That should fill this gap. Whoa. Let's get, this should be clear. Let's clear this up. Boom. Okay. So yeah, once you get above 295, it looks pretty bullish to me. Super micro devices looks bullish over 295. That's what I would say. So keep your eye on that. Plus the RSI starting to lift a little bit. Had a big blow off top. How far did it retrace? Came down 30%. Looks good. Looks good over 295. 295 slash 300, right? 300. That's your blow off top there for SMCI. If you're looking for equities, again, right? And you want to look at the Qs. You want to look at I don't know if they're profitable, but just watch the Qs. The Qs are still on trend. The Qs are still trending higher. They're still on the uptrend for the most part. Moving averages, it's struggling between the 50. I think the 50-day moving average is where people are kind of positioned like, okay, do we get in? Do we not get in? What is PPI going to look like? Are there going to be any big surprises? So far, the market reaction is, hey, if there's not a big surprise, if we're expecting these numbers a little higher, but we don't get surprised, then hey, we can go higher because we see earnings still picking up out of negative territory. We see fiscal stimulus coming in on the fourth quarter. And we know global liquidity is starting to pick up. The business cycle, which a lot of people just don't understand and miss it. The forward looking in, look at when you invest for long term, you don't look at what's happening now in this data. The market is looking 6 to 12 to 18 months ahead. Okay, that's where you trade. And forward looking, the business cycle is starting to turn up. It is bottoming out. You just need the dollar to roll over. Yields pretty much capped at this point. GDP has bottomed out. Payrolls, yes, payrolls will go down. They'll probably come negative, but any type of weakness, unemployment gets above 5%, right? If you get unemployment above not 5%, 4%, the Fed is likely to cut rates at that point, especially if you keep getting this data where housing keeps falling, right? Housing is what they're focused on. You can't control the core inflation. I'm sorry, you can't control oil prices. You can't do anything about that other than pumping, other than creating more supply. That's all you can do about that. But again, you look at the 3-month annualized, definitely inflation is going higher. I think technology is going to pay the most. Thoughts about PayPal stock? Yeah, you know what? I don't know their fundamentals again. Technically, PayPal looks like it's really struggling. I would say there's probably something underneath the hood that we are missing on PayPal. I don't know what it is. But consumers weakening right now. I'm not bullish on PayPal. It's in a bear trend. It's like the moving averages are showing a lot of weakness, a lot of steep weakness here. So I don't really like it. I'll tell you what I like right now. Look at even Square is very weak, and I think it's because the low end consumer is weakening here. Okay. So really mega cap tech, or businesses that are very profitable, they have pricing power, their margins are expanding, they don't have debt, they don't have a whole lot of debt, their balance sheets are pretty solid, right? That's who I think pulls the sled here going forward. That's who pulls the sled. You need fiscal policy to help that out. You need more fiscal policy into those names, like Caterpillar has been profiting from the infrastructure deal. So look at Caterpillar forming a nice solid wedge here. Caterpillar, probably, my guess is Caterpillar is much higher from here in the next 6 months because they're going to get fiscal liquidity. Do they really care that the consumer slows down? No, they're B2B. Caterpillar is going to benefit, and I am not investing in Caterpillar. I like tech better, but Caterpillar is going to benefit from the infrastructure bill, from any kind of building, any kind of manufacturing, right? And we see the manufacturing cycle starting to pick up again. So Caterpillar forming a nice wedge here. This is actually a nice looking trade. I don't know if I'll take it, but Caterpillar looks strong. It's pulling into that 50-day moving average. I don't think every stock goes up here until you get rate cuts, until you get more liquidity. Not every stock is going to go up. It's going to be the ones who can actually gain momentum in this low GDP environment, right? GDP is not really exploding. It's going into specific areas of the economy that are really technology, to be honest with you, infrastructure and technology. That's where we're at. Totally agree. It's an ugly chart. Yeah. PayPal, I don't like it. I'd be more when it comes to payment services. I know there's a lot of hype in SoFi, but again, SoFi needs lower rates to sustain this. It's not profitable. It's a risky company. If you're looking far out, sure, buy the dip. So it depends on your time frame, but SoFi maybe has more. I know Robinhood is getting smashed, right? Probably nothing going to happen here anytime soon. If you're really looking at payments, I mean, honestly, you got Visa, who's consistent. I wouldn't mess with Visa, but Visa is going to chug higher. Why? Because they have the fundamentals. So they're going to slowly grind higher, but you don't have a big opportunity. Visa's not going to expand that much. They're not really going to expand that much. I'd be more interested in what's happening with crypto, right? Which we went over yesterday. And Bitcoin is still holding the 25K level. Oh, this is Bitcoin market cap. Interesting. So Bitcoin's still holding that 25K level, $25,000 level. And BlackRock investing, tokenization of everything. Like when it comes to payment rails, a lot of these, PayPal, Square, they all went higher when crypto moved higher. So you might as well own crypto if you want another lever for that. MSTR, you're looking at MicroStrategy, right? I know I got this marked up like crazy, but MicroStrategy, even though who knows what they're going to actually do here going forward, I don't know. I don't know if I'm too, I don't know. I think the best play is really easy right now. I think it's going to be Tesla, right? I think Tesla's still the best play. You're getting, it's holding that moving average. So right now we got a clear support, guys. 255, 256, 260. That's your support for Tesla. Still chugging higher. The narrative is barely starting to come out, right? You're getting some analyst upgrades. You had another one, I believe this morning was another upgrade. You're getting more liquidity coming into the market here. Boom. You're getting China also continuously stimulating the market. I saw that data too. China's credit impulse picking up. China's going to keep pulling global liquidity up. So this global liquidity indicator, right? It's eventually, well, you can't see it right here. I'll have to back out a little bit, but global liquidity is going to start picking up. That's too many moving indicators there. Here we go. Let's just focus on global liquidity. Yeah, here's global liquidity, right? And global liquidity is starting to bounce from the September 22 lows. Sorry, I want to say 2022. So yeah, September 2022 lows. So liquidity is at the cycle bottom. You get the manufacturing cycle starting to pick up. This is the bottom. Oh, is everything at an angle? Okay. Yeah, the camera's probably a little crooked. Who knows? It's a little crooked there. Either way, that's not the focus, right? The focus here is opportunity in the market. Opportunity in the market is the focus right now. Could we see a weak market in October? Well, let's go over the seasonality, right? Let's go over seasonality really quick. Let me take a breath here. I've been talking way too fast. To wrap up the last segment, inflation's coming down. Core inflation is making progress. Your only risk, as usual, as we say, is these oil prices continuously climbing. But again, the market obviously isn't too concerned with that. at the moment. Not too concerned with that at the moment. A lot of good macro here, other than oil going up. And oil's not going up systemically. Like, this isn't a systemic issue, right? Oil going higher is not a systemic issue. It does leak into services, but what happens is people will slow down on their spending. They're going to slow down on their spending, and then core comes even lower. There's less demand for oil. I bet you this season usually get the strongest fourth quarter for spending. It's going to be weaker than expected because, yes, credit card payments are probably high right now. You probably get a month where people are like, all right, let me pay these credit card payments off, or they just keep spending because it's seasonal. What is it? Christmas. You got Christmas. You got Thanksgiving. People start to travel again. So really, I don't think there's much downside. I think Q1 will be the slowing of spending because Americans just like to spend a lot. They spend no matter what, right? So you can't discount that. Oil prices being higher going into the season is really a bad setup for CPI. I'm not gonna, but maybe oil's running up ahead of that. Who knows? Who knows? So could the market see a bad October? Here's what I will say about what do you mean by bad is the first question. The first thing you got to think about, what do we mean by bad? So if we're looking at S&P, right? Actually, let's just go to SPX because I got that marked up like crazy. We're still in the uptrend. The market is still trending higher here. So a bad October, coming back down to 433 at support, is that really a bad October? I would say not really. You're just consolidating. So your downside is that we keep consolidating sideways. And the biggest events coming forward are going to be CPI. Well, first, the Fed has to decide next week, right? A week from now, the Fed's going to decide, hey, what are we doing? I think we get retail sales also tomorrow. If those are weak, then stocks probably go up because that means bond yields will ease even further. Maybe that's what they're front running. And so we'll see how that plays out. But so far, yeah, housing shelter inflation is coming down, right? It's not a big deal right now. We're not seeing that. The biggest risk might be that you do get some surprises. You get some surprises on the upside where the data comes in way too strong and the market has to reprice. So again, right now it's pricing in no rate hike. If that does change, that could bring some volatility. But seasonally, September is the weakest month of the year. Okay. The thing is, once you're already up on the year, right? Or once the previous month was already negative, which August was negative, right? This whole August was negative. Well, that changes the correlation. Usually September is actually positive if August is negative. And so far in September, where are we at, right? Where are we in September? We started September right here at 4,500. We're still negative. Maybe we just go sideways for September. We still have some time to go. Now, when you're up more than 10% on the year, S&P is typically higher. I think, 68, 60, 70% of the time. When you're in an election cycle, it's up. My guess is here too. The market is going to sniff out more stimulus from the White House going into this election year. If people do roll over and they're you see what Joe Biden's doing, right? Printing are promising more student loan debt. If things slow down, they could pass another stimulus check to people who are struggling, right? The market's going to like that. And people will say, okay, that's going to bring inflation higher. Well, if you have jobs, if labor participation is up, we're not getting wage inflation anywhere, right? Most of the stuff that the Fed's worried about is just not happening, right? Have they talked about oil prices? Not really, right? They haven't really talked about oil prices. There's not a global risk there. So we're just not seeing that. So yeah, you could always get thoughts about government running out of money in October. Oh no, yeah, that's another one I'm looking at too. The government's not going to run out of money. They all this pressure on the U.S. Treasury market is because they are filling their spending account. It's called the Treasury General Account. They've been filling that up, so they have a lot more money. I expect even more stimulus to come out over the next 6 months. Who knows? Just because they've been filling that up. So yeah, you get more pressure on rates here going up because there's more supply of bonds, right? Now let's try to invert this. I don't even know if anybody really understands or cares how this works, but let's say that these are 2-year bonds, right? This is the actual price of bonds. Not here on the percentage, but the movement of bonds. Well, you got bond buyers coming up, right? It's inverted. So bond buyers step up, but then the US Treasury prints a bunch of treasuries, right? Why? So that they can spend from the government, so they can keep spending. So all those treasuries they created now pushes the price down because they're debasing the treasury market. They're putting more supply online, right? Scarcity is what causes price to go up. That's the reverse scarcity. You're putting more on there, so they come down. Now, what I'm saying is, with all that money that they did create, right, that push bonds down, they're going to spend that money. So they're getting ready to spend that money. Who knows where it's going? It's probably going to the Inflation Reduction Act, which is why I'm bullish on Tesla. Plus, the EV credit going into 2024 is turning into a rebate for Tesla cars. You got Cybertruck coming out, right? You got Dojo coming online. You got full self-driving possibly announced this week, or not this week, but this quarter or next quarter. So there's individual stocks who can really benefit from this environment. But I think the overall market could trade sideways or just go back to the highs, and unless really those gasoline prices come down. So I think oil, or oil prices in general, you need oil prices to reverse, right? They are headed into to resistance here at 92. And that would be some good news if they did come down. I think the market will really go up. But at the end of the day, you have a big cash cushion from the RRP, and that money is going higher. This has been pushing the market up. And I think this is why people start to take a risk here, because the S&P is starting to bottom. It's wedging. It's getting tight. People are getting FOMO. Why are they getting FOMO? Because they predicted a big recession and it just didn't happen. The recession is not coming online. We're not seeing it. What it is there is a recession. It's a rolling recession. There's a recession in financials. There's been a recession in housing. Jobs are right. Job growth is starting to it's been decelerating the whole year. Even though jobs come out hotter than expected, they're still decelerating to some degree. So that's kind of the backdrop there, when it comes to markets. Let me see if I can make this a better picture. Okay, now I'm going to go into the technicals, because again, there's some trades out here that are looking pretty nice in my view. Let's look at ZM here. Zoom still sort of struggling. Zoom still can't get above. Man, Zoom is so weak. You really need Zoom above 75. We haven't really looked at the Dow. Let's take this off. We haven't really looked at Dow or IWM. IWM looks very weak, right? And there's a good explanation for this, for small caps. And that explanation is that rates are still elevated, and that puts pressure on their earnings because they're not very, very profitable. So, well, they're not profitable. Most of the small caps are not profitable. They're based off of lower rates. So let's say rates stay higher for the next 6 to 12 months. Well, you're going to get rotation of money and cash into bigger like technology plays, because the Russell 2000, these small caps, they need lower rates to survive, right? Not all of them. You can find some individual companies who don't need it, but for the most part, small caps are going to be coming down. Let's see, what else do we have here? Maybe the individuals we'll look at KRE here. Oh, KRE is at risk again. So we haven't visited this, but if KRE rolls over, this is basically the regional banks, right? If you get the regional banks roll over here, how do I get this to fit? There we go. So if you get the regional banks roll over, the Fed, they're going to pause. They're going to have to pause here, right? They're going to have to pause, possibly even cut. Maybe they don't. Maybe they just pause, and maybe they just inject more liquidity, and you see global liquidity pick up. So if you really look at this is pretty interesting here. If you look at the global liquidity index, our Fed net liquidity, this is Fed net liquidity. It looks like a wedge pattern, right? A sort of wedging. And the Fed's going to have to decide to save commercial real estate if it falls apart. And guess who? This is carry. So these are the regional banks. The problem with the regional banks is that, yes, commercial real estate is probably the biggest vulnerability in the global economy right now. Well, in the US economy, commercial real estate. If you get some defaults, China's defaulting. If you get more defaults, then guess what? These regional banks, they hold the most commercial real estate on their balance sheets. Therefore, they start to default. You see KRE sell off. So I'm always watching this to see if it leaks. It's probably going to be a big move lower when it does move. If this thing sells off, look for global liquidity start to pick up again, or not global liquidity. Let's not call it that. This is Fed net liquidity. This will be the money market fund liquidity, or the Fed's balance sheet might pop higher again, right? I don't think I have it on here, but the Fed's balance sheet will step back in, plug up the hole, market goes higher. So there's all the scenarios, there's more variables, I think, that lean towards the market continually to chug up here. That's what I see. Let me see. I know I missed a bunch of comments here. Nah, yeah, that feed is ridiculous. I don't want to see all those entries. So let's move. Let's open up the trade. Let's see what the market is doing. It might be selling off right now, going into the close. Oh, bread prices are down too. I know some food went up, but I saw that bread prices were down. If you look at bread, and this is probably why. Look at wheat futures. Wheat futures are getting smashed. Wheat futures are down what from the highs, 61%. Yeah, wheat futures are down. So you're gonna have to switch to noodles, right? If you're broke, those prices are coming down. Which kind of sucks because you need more protein, and bread's not really good for you anyway. But this is mostly about the is mostly about the equity market or risk in general, and risk is still pretty healthy here. Risk is still pretty healthy for the most part. All right, yeah, let's open up that segment. Let's get this out of the way. I'm gonna take a look at Tesla though, right now. Taking a look at Tesla, all these catalysts coming in. Did it regain the 50-day moving average? Yeah, it is. It's regained that 50-day moving average. Big resistance here at 298 to 300. My expectation is if we throw up the RSI and you get overbought, we're headed for overbought. A lot of buying power coming in. So this sort of tells you right here that there's people stepping in. There's liquidity coming into Tesla. There's a lot of demand for Tesla at this point, especially all those investors who missed out. Also, Tesla is underweight for most managers, very underweight. So that gives you, if they have to overweight from all these upgrades, price is going higher. Hey, retest this level. Now, where do you sell if you're holding any options? Right now, I'm holding some options on Tesla. I'm looking at the retest of 300. I want to see how it reacts. But for the most part, I want to see it get oversold, right? I'm sorry, overbought on the RSI. I want to see an overbought signal right into this uptrend, maybe around 360, right? When would this be? Right before earnings? We might run right up into earnings again and then sell off, right? We've been doing that. We've been doing that trend where you have earnings, it moves down, and then after earnings it goes up, and then it runs up into earnings, and then we're down again. And I think we might run up into earnings. That's what it's looking like. You get all these catalysts, right? That's if it runs up into earnings, then you get a sell off because really, I mean, what are they going to announce other than Cybertruck? I think this will be if Tesla does start to elevate, it's going to be buy the rumor, sell the fact. I think until you really get margins start to appreciate again. You need margins to come back up. They are stealing market share, but you need margins to go up for Wall Street to really start to dive in. In my view, that's what I think. All right, so here's the real. Okay, you get a big pop in S&P right now, right back above VWAP. Very constructive here. Yep, let's do some TA. I know I got a lot of stuff marked up here, but these are 443. These have been our supports. This gap, we can sort of get rid of this gap. It got filled already. Let's remove that. We're wedging. The S&P is wedging. So Let me see. I'm thinking if we get below, we could come back to 444 and still it's not really a breakdown. You need to get above 442. So I'll tell you this: if SPY gets below 442, I want to say it holds below 443. We're probably going to break back down to that 438 level, possibly the 100-day moving average. And if we get above 449, I don't want to say 450, but yeah, about 448, 449. If we hold above that, I mean, there's going to be a lot more volatility to the upside because I think there's more people who will FOMO in and push the price up versus people who are going to sell. Not a lot of people are going to sell here at 450. There's going to be more FOMO buyers where there's a lot more buyers down here and maybe some short-term traders, but there's too many buyers. There's a lot of people off sides in the market right now. There's a lot of people, a lot of investors or professionals who are just not exposed. So if there is a sell-off, they'll be quick to buy those dips, especially with core inflation coming down, earnings being revised up. We got to keep that in mind. Okay, this trend was already violated. Yeah, and then in the intraday, you're getting a little pop. See what the news, what the headline is. White House says budget director Young, others blah blah blah. That's not interesting. Nobody cares. I wonder if this is what caused the sell off. This might have been it. Look, the S&P, the S&P sold off around 10:45 a.m., 10:45, 10:50, and this is when we got some geopolitical risks here. State Department says we will not hesitate to impose sanctions on Russia or North Korea over any future arms deals. Oh, because right now Putin's speaking with Kim Jong-un. So again, if you get geopolitical risks, yeah, you could definitely sell off. But without these risks, market goes higher. China to be more transparent on iPhone curbs. Okay, White House on China's iPhone bans. Watching this with concern appears to be aggressive, inappropriate corporate. I think this is all just posturing. This whole we're not going to use iPhones to get a deal with the U.S. Right? We need to make a deal, or they want to make a deal with the U.S. Their economy is starting to struggle here, and the more the dollar goes higher, the more it debases their currency. Definitely want to keep that in mind. All right, so again, let's look at Tesla here. TSLA. I think I mean, I know I say it all the time, but this is probably the best setup I see. Oh, other than AMD. I'm also watching AMD. They had a nice pop today. Look at this price action. Let's go into the intraday. Let's go ahead and zone in to the intraday price action. 5-minute charts. I mean, you're getting a lot of buying happen here for Tesla at the 260, what? 265, above 265. Yesterday, we capitulated lower. Boom, got bought up pretty quickly. Let's bring this down. We got bought up pretty quick here, moved higher. Yeah, we made a new low, but on the open this morning, boom, buy. There's a lot of people stepping up. That's what I see. There's buyers stepping up. You got a little wedge here, got above VWAP, sold right back below VWAP. So maybe another retest of 268, 267. That was the gap. It did not get filled. So maybe 267 is a gap to be filled here on Tesla. 267 might be the level if you want to get in looking forward, but you want to see a capitulation like this. You want to see something touch and go. If it consolidates on there, maybe so. Other than that, you want to wait for VWAP. You want to wait for it to get back above VWAP. The resistance for Tesla looks like really probably 275. My guess is you need to get above 275 to see some momentum. It could be just consolidating between 265 and 275. That's what it's looking like. We're going to see some consolidations. Go to that 30-minute chart. Yeah, 265. 275, continually climbing. Let's look at the quarterly. No, let's take the gaps off. See what it looks like. Oh, this looks like a nice way. This is why you got to take the pre-market off too if you're a trader. It's a lot of noise. There's a lot of noise in the pre-market. So now I can remove this. All right, too much noise in the pre-market. Now I'm gonna look. You got a nice wedge. You got to get a big gap up above the previous level, and now you're wedging. And maybe this wedge is not over. Maybe it is, but you're now wedging into you're wedging into that 269, 270 level. So yeah, above 275 is probably the blow off top. You could look for a sharp retracement on the downside. This looks a lot like it did earlier in the year when it started to move up. Looks very similar to what it did before. Let's see if I can find it. Hey, the market with CPI going up and the market holding in here and yields starting to pause, man, this is very bullish. So you saw we got a wedge before on Tesla. Look at this big wedge, right? This is a big wedge pattern. Why does this keep changing sizes here? Trying to get this sized in right. There we go. Okay. And just so you know, IWM's here at the bottom. Let's see what the advanced decline is actually looking like. ADD. Okay, we're still negative in advanced decline. Let's put the Dow here. Dow starting to recover. SPY 446. We'll look at those moving averages too to see if more stocks are moving above that. All right. So we had a wedge earlier. Now we gapped up and we're wedging again. So it's like, hey, what other news do you have coming into the market here? I know Elon is meeting up right now at the White House talking about AI. You have the strike too, the union strike for autos. All right, let's go back and see what it looked like before. Oh, okay, here it is. Here it is. So earlier in the year, when we did sell off, you know, we made new highs on the year, sold off about 20%, 15, 20%. And then we started to wedge here again. The Tesla always does this. It creates a wedge, right? Gaps up. Okay, gaps up off that wedge, consolidates again. I mean, this isn't really like a clean wedge, but you have another, you could just call it a wedge, whatever. So it gaps up, wedges again, and then I mean, you probably need a catalyst for this to gap up again. You might get them though. There's a lot of catalysts coming in. You gap up again, and that's when we ended up running to, you know, all-time highs. We came down a little bit, it retested, and then came not all-time highs, but for the year, highs on the year. So very bullish price action starting to form for Tesla. That's a nice dragon wedge. I think we saw this. Oh, we got it again here. Back here, you got the gap up. You had another wedge. I mean, it's just the price action is looking really good right now for Tesla. You gap up, you consolidate, you start to move higher. Oh yeah, Apple too. The Apple event. You just had the Apple event. Let's see. Do we have another gap up here? This is back 180. Yeah, another one here. Gap up. You get a wedge and a breakout. Right. So you get this gap up here. It wedges, breaks out. Like this is what it does. So I'm seeing that again. The price action is starting to get very bullish for Tesla. We're not insider traders, but the price action does tell you a lot about what's should be happening next. Big wedge, gap up, another wedge, gap up. Ugh, it's looking good. AMD. Let's take a look at AMD. AMD has a very large pattern here, very bullish pattern. And let's see, do we see any reverse head and shoulders? You kind of have a reverse head and shoulders here, right? Here's your shoulder, here's your head, here's your shoulder. And you want to see it break above probably I want to say 110, but the real pressure is about 112, probably above 112. Yeah, AMD above 112. That looks pretty solid there. And if it breaks back down, you could also buy the new low. If the market structure is still bullish, right? If we're still heading higher. But I like this inflation report. The inflation report was you know, pretty progressive. You get super core coming down. All right, let's look at the internals here. How many stocks are trading above? Oh, doesn't look good. There's only 30% of stocks in the S&P trading above the 50-day. You have 47. So pretty suppressed here. We're still down. Still down here. That's not great. It's definitely not great. Somebody said Amazon was doing well. Amazon's still chugging up here. Yep. Still moving along. Palantir. Palantir, I'd be careful. This is a very bearish pattern for Palantir. You got a head and shoulders, shoulder, head. You really got to get above 16 again. And this is a pretty much a bear flag. I've seen this on Palantir so many times, where it gets really steep here. It makes a new high, and then it gets really steep. I mean, you could call it a wedge, but it looks like a bear flag more than anything for Palantir, right? And if we go back in history, you can see that. Oh man, this thing is really. See what's going on. See if that speeds things up. Man, I hate when there's technical issues. It pisses me off. I got too much data on here. See if that speeds things up. Nope, still doesn't work. All right, well, here's what it looks like, right? This pattern right here that we're looking at, it looks like the past, where it makes a big high, starts moving higher. This is you could call it a bear flag. It's trending up, but it sells off pretty sharply. So I'd like to see it get above 16 and then hold that level. Definitely want to see that for Palantir. Above 16. See, what were some other plays on here other than S&P? No, not that. Let's go to tech. Okta, Palantir, SoFi. Oh, you know who we forgot to look at? ENPH. Enphase. This is crazy. This is why you got to stay patient. This thing will pop eventually. Look at that sell pattern. That's a clear sell pattern there. Maybe there's a lot of shorts. I want to see what is the short interest here, because this could be a pretty explosive move in the future. The options chain should be strong. I'm going to go to FinViz, check out the short interest. Here, I'll show you what it looks like. So when I go to FinViz, so you guys can, if you're new, kind of learn how to look at the short interest. You come to FinViz. Here's the headline page, or here's the front page, homepage. ENPH. Type in stock you want to look at. It gives you all these intraday fundamental, indicators. Well, they're not indicators, just stats. and you want to find the short float, right? Short float ratio right here. Zoom into it. So there's 10.9 million shares short. Short float is at 8%. I would like to see it above 15 or above 10, but there's still a chance for a short squeeze here. So I'm wondering, hey, are there people piling in short or people just selling the stock? Right? That's the question. So 8.5 is that's a lot of shorts. I mean, what is this? A 16 billion market cap? That's a lot of shorts, but it's not too much, right? 20%, there's going to be a short squeeze if something good happens on 20%. So a lot of downgrades. Look at that. We've got another downgrade by Truist, Wells Fargo in July. So this stock has had a lot of downgrades, which it could keep falling. I wouldn't be too optimistic about it going higher at this point. It could be over. Yeah, it's oversold. Maybe hopefully it bounces if you're a holder. Um, I know Meet Kevin is probably struggling. This is one of his stocks. Let's go to the macro. Let's see the RSI. I wanted to see the RSI. Man, the RSI popped and then it just can't get up. It just cannot get up here. So EMPH is struggling. It's going to need that fiscal policy in the future. Still technical issues here. It looks like it's about to make new lows also. Not too positive for ENPH. All right, well, next stop, how about Carvana? No, I wouldn't even trade this. I don't know why I'm looking at it. I think because I saw a nice little wedge. It bounced off that wedge. I just don't trust it. It already had a monster short squeeze. I don't know if I trust it. I don't know if you could really trust Carvana. It's still on an up, still going up, still moving up, but hard to trust. Carvana, who are the biggest movers from today? Because over the next 3 days, the market's going to rally either higher or lower. So I'm just trying to take a look at who's gaining momentum following this. AMC is getting smashed, huh? Oracle moving up a little bit, roadblocks. I think Kathy Wood dumped her D, who is it? DraftKings. I think she dumped some DraftKings. Netflix. Ooh, Netflix got smashed. I wouldn't short in this market, but Netflix getting hammered. Wonder why. Oh, they just lowered their guidance. Hey, that's a key signal that the low end consumer is starting to capitulate. Plus, Netflix kind of sucks right now anyway. There's nothing good on there from my view. Nothing good. I haven't watched Netflix for like 3 months. Um Dang, they got lowered guidance. Yeah, that really crushes you when you lower guidance. How was Apple responding? Ooh, Apple pressing the lows. This actually looks like a bear setup for the market. You get these big players selling off. The S&P is moving up. Could be a signal of a sell off, or it could be a bounce. You just don't know. You don't know. Still have Google and Amazon holding up, but this is a big bear flag. Probably comes back down at some point. That can't keep up. That cannot keep up. They're going to need some good news to really break out here. We don't do much TA. We haven't been doing TA lately, but we're doing a little bit of TA here. Microsoft looks solid. Nvidia, ooh, that's not bad. Nvidia's still consolidating here, so a lot of interest there in Nvidia. You got a reverse head and shoulders if that can continue also. Who's this? CRB real estate? What? Hostess? Twinkies? AMC short. Yeah, not interested. See, Roku's coming back down. A lot of the market is backing off here. Twilio, Oracle. Yeah, Oracle. Well, Oracle caught a nice bid. Is this Oracle? Yeah. Oh no, they sold off hard. What happened to Oracle? I haven't been keeping up with these individual stocks. See what's going on with Oracle because Oracle broke out, and that was a strong. Like they got really. I know a lot of people got caught here on Oracle. They broke out to the highs literally the next day. They gapped down beneath support. Wow. Sorry if you got caught in that. Oracle shares. Let's see what happened at Oracle. Downgrade Oracle neutral. Oh, this happened the other day. I heard about it. I just didn't know how bad the price was. Price target at 100. Dang, they got smashed there. This is going to be the AI hype is not real. That's sort of the narrative that's probably going to pop up. But see, you have a lot of mixed signals here. Bernstein raises price target at Oracle to 144, outperform rating. So it's a stock pickers market. That's what I'll say. It is a stock pickers market. Open door back to 350. Open door could be a nice setup if it consolidates here. I'd have to go back to the fundamentals though. After we got that big short squeeze, not sure if it can still hold on there. Coin depends on regulation. Adobe, Airbnb up a little bit. PayPal still getting smacked. How about Disney? What is Disney looking like? Disney still getting crushed? Disney found a pop finally. Right at long-term support, but still doesn't look that great, my opinion. If we have no more questions or comments on market close in about 2 minutes, I guess we'll be done here. I mean, we just had a good inflation report. Uh, it seems bad at first glance. It looks terrible because inflation went up, but it's all ran by oil prices. Core is coming down. And if you really look at the report on core on a 3-month annualized basis, which is quarterly, which is sort of how the stock market runs. Actually, let's look at the quarterly stuff here for the SPY, the quarterly charts, because the market moves off earnings more than anything. So it's looking at what are the last quarter of earnings, how was inflation looking that last quarter. And I think the market's more concerned with that because it's what moves the market and what moves the Fed. Those are two different things, by the way. Hey, thanks, A. I appreciate it. I do appreciate it, man. Thanks for the support too. Glad to hear from you guys. If you guys are on there, I'd love to hear from you. Love to see where you guys are from. Let me know where you guys from, where you coming out of, where you watching from. I always like to think about, oh dang, these guys are in a different country, right? We had somebody from Ireland the other day. So I think that's pretty cool. But like I said, there's two things that move the market. We can't see stuff you look at. On YouTube. This is just this is more so commentary. The charts are on YouTube. The link is in the bio if you want to see that. If you don't want to switch over, cool. Overnight calls on SPY. I wouldn't do it. I wouldn't do it. EMPH has share buyback plan, right? I don't know, cool dude. I don't know if they have a share buyback plan. What about overnight calls on SPY? Oh, you keep saying that. I would not do overnight calls on SPY. Those are risky gambles. I think if you're gonna trade SPY, so YouTube, we're on YouTube right now. If you want to see the charts, I'll do some more TA. SPY looks solid. Look at that wedge coming from the lows. Like this is some solid price action. Let me finish this damn Celsius real quick. I know a lot of people are negative, but I'm pretty constructive on the market right now. It's holding up. What else can you throw at it? Earnings are being revised up. They may slow a little bit, but big tech is not. Stock pickers market. Here we go. We got 3 seconds. 2, 1. So, like I said, If you're gonna get long SPY, you want to see S&P get above 449 right now. That's the local resistance, 449. That would also be above the 50-day moving average. And my guess is it happens over the next 3 days. Tomorrow you have PPI. PPI is going to confirm how bad inflation actually is, right? That's what PPI is going to do. Okay, PPI leads inflation, by the way. They're producer prices. So you want to see the inputs to the producers. How is that going to affect the market going forward? So far, a lot of companies can adjust. The stock market looks 12 months out. It can adjust to higher or lower PPI prices by passing it on to the consumer. So, what I think is going to happen is there will be less spending in certain areas of the market. You have 11 industries, right? Technology, information technology, semiconductors. Well, that's part of tech. You have what real estate. You have the real estate market. You have so many sectors, retailers, right? They're probably getting smashed right now if we look at retail. As a matter of fact, that's what I'm going to switch to after this. I want to take a look at how stocks are moving because, like I said, there's something that moves the market and there's something that moves the Fed. Those are two different things. What moves the market is, overall is going to be what in the economic cycle moves the market is okay. Our earnings revising up, our earnings bottoming. I think we are seeing earnings bottom. I mean, that is the consensus right now, and a lot of people are negative on earnings. So that's going up. Number two, AI, productivity. That's pushing up. The narrative is pushing up S&P. Number three, liquidity. Liquidity is coming into the market. That's what I keep signaling here is the money market fund liquidity from the RRP continues to fall. And that is fueling the market right now. That is keeping fuel within the market. Okay, the market is not up and down. It's usually trending up for the most part. It's always trending higher, and everybody's so worried about this inflation. I'm going to switch charts here. Everybody is so worried about inflation making a little pop up from oil prices. Okay, you're so worried about oil prices. Well, the history of inflation. Let's see if I have that chart on here. Oh, this is what slowed down my computer. That's fine. I have so many charts stacked up. I need to get rid of some of them. Back in the 70s, or when inflation does come down, I'm sorry, not when inflation comes down, but back in the 70s, the last time we had a big inflation move up, there's always a bump. There's always a little bump that comes up and then it comes back down. So, I can look at it on here, right? Look at this US inflation rate year over year. So let's take a look at this. I have to take this off. I'm going to have to turn this into a regular chart. It's not a log. So here's inflation, right? This is what we are seeing. Let's take the RSI off. Who cares? So last time we had this big bubble, right? You had this big move higher, and everybody's expecting this. You come down and then you launch right back up. But it's not the same regime. So last time we got to what? 12%. Let's compare it to this 12% bump. We came down and you had a little bump higher and then it came back lower. So everybody thinks it's just going to go higher just because. Well, no, there has to be a structural reason for that. You need oil above 100, maybe 120. Maybe you need more stimulus. I mean, what's going to push inflation up? We don't have a supply issue right now. So that's not going to push inflation higher. We're not getting wage inflation. That's not going higher. Housing and shelter is due to fall. So it's not just, oh, look at the 70s. This is what it's going to happen. No, it's more than that. Okay. I would even say we're here. We've just fallen from the biggest move ever. We're having a bump higher. Okay. We bumped higher. Last time this was came down to what 2.5 day. That was a big drop. And then it jumped up to 4. So it doubled. It almost doubled. And then it came down. This is where I think we're at. We're moving higher on the inflation rate. And we're going to peak out and come back down. And this is probably going to be determined by oil prices. Nothing else is pushing CPI up. Core is falling. Core is falling. Nothing else is pushing CPI up. And then eventually you go near negative at some point. Right. And then you get back to normalized levels. Oh, this got back up to 6.7. What in the 90s? I didn't even realize that we got up to the inflation rate got up to 6 in the 90s. And then we came down, and then you had technology take over. You had this period was probably the most strongest. This is a very strong period right here, 90s to what 95. Then you got you got down to 1%. Either way, my point is you're going to get bumps in inflation. Look at these bumps, bump, bump, bump. So everybody's all worried about the bump. Oh my God, we're going lower. It's just a bump. What up, Yassine? Haven't seen you for a while. Are in risk on right now. Also, okay. Yassine says, "Hey, we are in risk on, right? Also, CPI was positive. Doesn't this mean USD will keep going higher?" So there's never one factor that makes anything go higher. There's multiple factors, and what I will say here is that right now, when we look at the macro forces, this is the easiest way. By the way, this is look. I'm going to give you guys some. If you're new here, a way to look at the market that's really easy that navigates the market. There's a couple macro forces that really change the market. Okay, it's the US dollar. That is a huge macro force, the US dollar, because everything is priced in dollars. Stocks, right? For the most part, everybody's, oh, no, it's not. Yes, it is. Everything is priced in dollars, which means this is the denominator. If you're familiar with math, if you passed 8th grade, this is the denominator. When the denominator goes higher, the value above it, everything priced in dollars, depreciates in value to some degree. So a higher dollar in general, this is not always the case, a higher dollar or a very strong dollar moving up quick is going to be a headwind, right? It's like you're running into the wind. It's a headwind for asset prices. It's a headwind for crypto. It's a headwind for stocks. This is why I keep tracking the dollar. If it falls, stocks go higher, right? That's what we've been seeing on this cycle. Let me put the S&P on here so you can see this. SPY, where you at? Okay, when the dollar falls, look at this big fall. That's the bottom of the S&P. S&P climbed higher, right? Dollar peaked here, came down, S&P launched higher. Dollar peaked here, came down, S&P goes higher. So this is one factor. You want the dollar weaker, okay, or sideways for the S&P to continue higher. That's one factor. So Yassine, are we in risk on or risk off because of the dollar? Well, I mean, right now we're kind of in the risk off period for the macro forces because bond yields are up. So we have yields up right now, right? Yields are tightening the market. But I think we're at the end of the move here. This is my thing. I think we're at the end of the year. So our end of the move here. The dollar's at resistance. If we look at the RSI, it's oversold. It's rolling over. So we're at the end, I think, of this macro tightening from the macro forces. I think they're about to turn over. Okay, if I keep looking at the data, and really the trigger for this to turn over is going to be what the Fed does next week and going forward. Okay. If the Fed does pause, that's going to ease financial conditions. Now, my bet is Powell's going to try to use dovish. He doesn't want too much to easing because it could reignite optimism and spending and whatever. So I think he's going to be hawkish as usual, but really he's going to say, we're pretty much done. That's what I think is going to happen here, right? The other macro force tightening things is the damn oil price, right? This is where the warning was. I was like, okay, if oil gets above 83.50, CPI is going back up. We talked about this all year long. Now CPI is moving back up. But the Fed's focused on core CPI, right? So now we're just in a warning zone. Oil is a warning. It means if this continues, we're going to see a weaker consumer, which could actually help inflation. And we're going to see bond yields sticky. Okay, so valuations stay valuations, because the higher the bond yields, the higher the interest rates, the less earnings on your stock in the market. So the higher the oil price, it's a little stickier, right? So the macro forces are really tight right now. They're really constraining conditions. They're really keeping a headwind or pressure down on markets. Okay, that is bond yields, 10-year treasury. You want to look at the 10-year treasury rate, even though it eased today, which is good news. The dollar, and then oil. Okay. The other macro forces that I like to look at are the VIX. Okay. What is the VIX doing? Well, the VIX is suppressed. It's at 0. The VIX is coming down. So why is not at 0? The VIX is actually easing conditions. The VIX is saying there's no real warning for the market here. The VIX is telling us there's no reason to buy insurance. We're actually bullish on the market, right? And people say, oh, buy the VIX. It's at the lows. Good luck. You got smashed all year trying to do that. The VIX does not trade linear. VIX doesn't just respond because it's at a level. The VIX is not a trend. It's not an asset. Okay. It is a way of buying insurance. So once you're under 20, that's when really there's not a whole lot of risk in the market. Once you get above 20, now it's risk on. I'm sorry, risk off. My bad. It's been risk on though since we got back up below that level. We've had a lot of risk off. And when did the VIX leak below? April, right? April, May. It got below 20, and that's when we had the giant rally in NASDAQ. Everybody was pissed off because they're unpositioned, because they were told the market's going to fall apart. big recession not happening. So the VIX is telling us, nah, not really too much going on here. And there's a couple of reasons for that, right? There's a couple of reasons for that. I would say primarily it's liquidity. Okay, it is market liquidity. So if we look, and this is key, this is the central banks. This is the information you're not going to see anywhere else. You're not going to hear about this. It's hard kind of to explain, but stick with me here. Okay, stick with me here. So I want to show you guys this really quick. Let me throw the VIX down here. Okay, the VIX is kind of consolidating at the lows. Now, this right here is a bunch of cash that left the system. This coming down right here. When you see this line coming down, this was cash leaving the stock market, leaving the US Treasury bond market, leaving the market in general, and going to get parked at the Fed. It's going parking itself at the Fed because it's collecting an interest rate on the money. Okay. The reason the VIX is low right now, not only are earnings starting to be revised higher, and people say, how are earnings going up? That doesn't make any sense, because the S&P 500 is not the economy. The S&P 500 companies can cut jobs, increase their margins automatically. They can restructure in a way that provides more efficiencies, right? And then they can retain their earnings. Plus, there's a lot of billions of dollars of spend on AI, right? So a lot of B2B spending is happening right here. The other big problem here, or not problem, but the other big factor to the S&P going higher is fiscal policy. We've been talking about this, right? The infrastructure bill, and these, look at the fiscal policy here is government spending, the infrastructure bill, the Inflation Reduction Act, the CHIPS Act. They don't all hit at once. They're like stimuluses that get injected into the economy every couple months, right? And we have a big one coming in Q4. I don't know the exact date. I just know it's coming, and the market is seeing this. So you're getting liquidity from the government coming in. It doesn't go into every stock. It goes into the stocks who benefit from the stimulus. That's why I love Tesla, because they benefit from the infrastructure. I'm sorry, they benefit from the Inflation Reduction Act. Literally, you get a tax rebate on buying a Tesla. Plus, it drives it's going lower. So you got fiscal stimulus in the market. VIX is like, why would we bet against the market? Here comes fiscal stimulus. Next, all that money from the RRP, right? It was $2.5 trillion. So this bottoming here, December 22nd, that was like the bottom of the market, right? Well, what happened there is that money said, okay, it is no longer viable to stay at the money market funds or stay in collect 5% interest in a year because NASDAQ is up, right? This is when NVIDIA exploded. NVIDIA is up 100%. So risk assets are going to gain me way more than parking it here. That cash left. Now that cash has been moving up into the system, and look at it, it is skyrocketing. And the question is, where is it headed? Where's the money going into? Either way, it is providing liquidity for the market. And that's why the S&P, I think, is not going to slow down. I do not see it slowing down or rolling over. There's a bunch of cash coming in from the RRP. And at this point, 2.5 trillion was the peak. Now we're at 1.5. So $1 trillion has just came in. That's insane. Just about a week ago, no, I'm just playing. About a week ago or two, we were at 1.8 trillion. Now we're at 1.5. So $300 billion just came into the market from the RRP. The question is it going into stocks, individual companies, or is it going into US Treasuries to buy up the debt that the government keeps offloading on the market? I think it's doing both. And if it buys up the debt, you cap rates. Rates are capped. Bond yields are capped. That means valuations can now say, okay, we don't have to worry about the future. These rates are capped. Also, there's more money going into the stocks. Oh, I'm sorry. You know what, Carbides? I saw your comment earlier. I just missed it. That's why I say put it on the YouTube, because it'll get stuck there. So yeah, I know I'm rambling, but the point here is, yes, the macro forces are tight, but I think they're about to turn, especially after this inflation report that shows core inflation is coming down. Headline is up. Oh, damn it. It's dirty. Damn it. Headline's up, but it's oil prices. And we know oil prices, we can see that. The market can price that in right away. Okay. All you need is one change in policy, geopolitical policy, because OPEC is very political. So you just need the US to do a deal with OPEC and say, hey, why don't you guys start increasing production? Stop hurting our economy. We're going to do a deal with you, blah, blah, blah. Janet Yellen's been over there in China, blah, blah. So we're getting negotiations happen to benefit the global economy. Everybody thinks that the economies are all separate. No, they all tied together. So really the US is hurting everybody by the dollar going higher. Everything's priced in dollars. So they really want weakness in the US dollar. And I think we're going to get that at some point. We'll see how that plays out. Either way, Oil is the one factor. We keep our eye on it. The faster it moves, like if it goes slowly up, it's okay. If it moves really quick, we're in trouble. That's going to cause some value at risk, meaning it's going to be a shock because you have to reprice everything. But if it slowly climbs up to 100, great. Well, guess what? US demand is coming down. So we're not going to see demand come in. They got to keep cutting prices and they risk losing market share to other producers. So I'm not, now that the market's not worried, I'm not too worried about that, right? So yeah, you have macro forces tightening the market, but there's liquidity coming in. Rates are pretty much capped. Earnings are going higher, and the Fed is about to pause, and inflation is making progress. So, so there's you have these other forces coming in, and so I think hey, there's more forces on the upside than the downside, right? And I think this is the key right here. This liquidity coming from the Fed. So SPY has a bullish consolidation pattern on the daily. I like for use. I like for use to drop a little more. I hate reading stuff that doesn't make sense because feels like I can't read. No, I'm just playing. I think SPY will hit around 420, then turn back up for the next year. Okay, cool, dude. Yeah, SPY 420. I mean, that's a big drop. You're probably hearing that, and I'm not trying to go after you here, but a lot of people are saying they just think, oh, 420, that's a strong level. We're going back to 420. I hear analysts talk about that. Oh, we're going to 420. Bro, we're not going to 420. And I'm not talking to you personally, but you people that we're not going to 420 unless something systemically, there's not enough cash. There's too much cash on the sideline. Do you really think, what did they say at the beginning of at 2022? The S&P is going back to the COVID levels at 3,000, 3,000. Never happened. Why? Because the further the S&P falls while inflation trends lower, people want to front run that. They're not all waiting at 3,000. They're not all waiting at 420. I will not buy the S&P until it hits 420. Bro, it is called game theory. Everybody looks at 420, but guess what? If it drops a little bit, they're going to scale in. They're going to scale in their money a little bit at a time. Therefore, the price never actually drops. There's no real sellers. There's not enough selling pressure. There's too much cash on the sidelines still. Fund managers are still bearish. As soon as you get some type of pullback, which we just got over in August, boom, got bought up. Now we're back above 444. So market psychology is, are you underweight or are you overweight? A lot of people are underweight. They want to get back in. They see all the macro positives. They're underweight. Okay. And now the data comes in better than expected to some degree towards the Fed. And, now they're like, okay, let's buy this dip. So I just don't think we're going to 420 unless something systemically happens, black swan, whatever. I just don't see it happening. We're still in the uptrend. That'd have to break the uptrend, by the way. Yassine says, I feel like we are risk on VIX is low. DXY is going up. Yields are going up. Hey, good job there. Evaluating everything, Yassine, is going up. I thought this would be really risk on. Well, remember, you want the dollar to roll over for risk on. You want the yields to roll over for risk on, right? Dollar strength isn't risk on. Dollar weakness is risk on because it signals that money is leaving cash. Therefore, it's being invested somewhere to some degree. Yields are risk. Yields being higher is a higher rate of interest, which constrains and pressures valuations. Or if it costs more to borrow money, you're not going to invest as much. You have to pay a higher rate. So yields coming down is risk on. Dollar coming down is risk on, right? But the VIX down is telling you, hey, there's still more confidence in the equity market. Today was CPI, wasn't the core CPI month over month the most important on Forex Factory? I don't know about Forex, but I will say this. Yes, the month over month core CPI was up. That is strictly because of one reason. Oil prices aren't just headline, they also leak into services. So transportation services went up because of that. That doesn't mean people are spending more. Inflation's out of control. What it means is, damn it, they have to pay more, so they're going to charge more, right? So the transportation services are up. That's it. If you remove energy, everything's falling. If you remove energy, everything is falling right in line, but the economy is still up. So it's very bullish. It's a very bullish macro outlook. Okay, I'm just waiting for those damn macro forces to roll over to really give me the signal. All right, risk on. That's when the market starts to elevate again, in my view. We just aren't there yet. Last time we got that was March, the banking crisis. Bond yields got obliterated. Look at this, 2 year. Look at the 2-year. The 2-year got obliterated. Okay, it was at 5%. It dropped all the way to 3.6, and the market exploded. Watch, I'll turn on the S&P. Boom, the S&P bottoms and goes higher, right? Because bond yields eased. Okay. If we look to the dollar, same thing for the dollar. The dollar peaked. Okay, so yes, the market can grind higher, but when you get these macro forces start to how do I say this? Start to swing to the upside, or not to the upside, but start to roll over, cycle off, then you really have a lot of you really get the real risk on move there. So the dollar peaked. No, that's not the dollar. The dollar peaked. It has been coming down, but I'm thinking about March. The dollar peaked here at 105. This was the level we're coming into today. It peaked at 105. The S&P bottomed in March. Okay, why did the dollar peak? Because bond yields collapsed. Okay, what does that do to the dollar? Bond yields collapse, risk on. The Fed pump liquidity. The more liquidity they put in the market, the less risk there is, because they're now covering all the weakness. They're plugging the holes of weakness in the banking sector. Therefore, people are like, oh, you're going to cover our holes? Well, there's not going to be no defaults, so risk on, right? So S&P goes from, where was it at? 3,900 and goes all the way to 450, 460. So I'm waiting for these macro forces to turn over. At this point, oil is the one. It's like, oil's more unpredictable because OPEC, but it's volatile. So yeah, core CPI, you got to look into the details. If you go to the beginning of this video, I go into the details of core CPI, so you can see kind of what's falling. Or you go to my Twitter. The Twitter I outlay exactly what's changing in core CPI month over month. X housing too. If you go X housing, it's at 2.4% on a year-over-year basis, and yeah, it's coming down. It's coming down, and the Fed's likely gonna. My bet is the Fed does pause, unless oil really runs to like 100. Hopefully not, but I think the Fed does pause. And really, do they even care about oil going up like that? I don't know. Maybe because it affects services cost, but even if they increase rates, that doesn't do anything to oil. That pushes you further into a deep recession, which maybe they're trying to orchestrate. Maybe they do want a little slippage of a recession. The problem is it's not linear. You don't just go up by 25 basis points and the market goes into recession by 1%. It might tip it over really quick. So I'm watching KRE, because KRE is going to be that signal. Does KRE roll over? Does the banking sector, is it too much for the banks? Right? So that's kind of what I'm looking at here. Hopefully that was a good explanation. You guys got it, understood. There's a gap at 420. Gaps don't always get filled unless there's a black swan. 430 is more likely, cool dude. I could see 430, 431. Because that still holds the uptrend. 431 still holds the uptrend, right? So that's my thought on that. I know some of you guys trading Forex. So you're looking at what? NASDAQ 100, NASDAQ Qs, whatever. Very bullish trend here. You gotta on the Qs, you have a nice trend into CPI. Into the uptrend with support at 373. So I don't know what that is on NDX, but in my view, looks good. I would say this. Look, we move if the Fed has to hike, the market comes back down to 355. More than likely, the Qs have to come back down, find support here again, and everybody's gonna say, "Oh, this is a rollover." No, it's not. We just broke that stupid. Look, everybody was like, I don't want to call it stupid, but I know a lot of guys are like, "Oh, they're super bearish," and that's fine. You can be bearish, but I mean, you got to measure the macro. They thought, hey, because what people don't get is that there's too much cash on the sideline. It's gonna get bought up. There's no systemic reason to stay short. All these guys have been wrong the whole time. So what they saw is this head and shoulders, right here, and it didn't happen. It broke higher. Now they're gonna say, oh, well, here's the head and shoulders. Oops. Now they're gonna say, no, this is the head and shoulders, right? So I know this is coming. Look at the head and shoulders. Well, here's the real head and shoulders. Here's what they're going to say. Well, this is the real head and shoulders. So they're going to keep saying it. The problem is a strong head and shoulders. The second shoulder is lower than the first shoulder. In this case, it's higher. So it's an uptrend. There's always this type of pattern in uptrends. Okay. There's always this type of pattern. So your better probability was here. Jackson Hole didn't happen. This is the big Jackson Hole candle following the meeting. right before the meeting, didn't follow through because buyers stepped in, and you think that just nothing changed. Buyers are stepping in, nothing has changed here. So blow off top, maybe Friday, maybe Monday. We'll see if there's any other geopolitical risks or not. What do we got here? Break on 430 will be break in market structure. Yeah, if we break below 430, there's something systemically is happening. And I'm pretty sure I'll be tracking enough of the macro to be like, all right, we're getting to 430. This is at risk. But I expect buyers to step in there unless like bond yields explode over like the level they're at now. Dollar keeps going up. Oil keeps going up. Maybe that'll cause us to drop. How about crypto? You know what? Crypto right now in the short term, I mean, I'm gonna release some videos, some short-term videos. I'd go watch that last one. There's some big catalysts coming for crypto. And the regulation we're waiting, Gary Gensler is waiting there for crypto. He's in there. Who knows what the hell clown show's going on? Either way, crypto is setting up. Like, this is a big macro trade here for crypto. So once that Fed liquidity comes in, like, this is the biggest driver of crypto right now, in my view. Fed net liquidity. Okay. Just take a look at this chart. And it is the same kind of for NASDAQ too, but any type of a collapse in real estate is going to cause the Fed to inject more liquidity. The hell? Oh, there it is. Okay. Bro, why can't what's going on? There we go. Right. So if the Fed does fall apart, if the real estate falls apart, the Fed's going to inject liquidity and crypto moves a lot off liquidity. So I'm watching this. They look very similar. This Fed net liquidity and the total crypto market. Where's it at? Total crypto market. Here we go. Including altcoins. So we're looking at altcoins and we're looking at Bitcoin and look pretty similar there. See that? Very similar. Look at the drop in liquidity. Liquidity drops, comes back up, and crypto catches a bid there. Liquidity sells off. So like the Fed is running the story here. The question is, where are they headed? What moves the Fed? What's going to move the Fed right now? What moves the Fed? Well, anything breaks, the Fed injects liquidity. Housing inflation continues to fall, which is lagging. We know it's lagging. They might actually use rent. The Fed lowers, they might cut rates. It's not oil, or else we would have seen the market react negative. So obviously oil is not a big factor right now. So yeah, Asan. Also, tokenization is coming for crypto. We're getting closer to tokenization. I think that's the big move where Wall Street really starts to take over crypto. They want to tokenize. They're going to have to they want to integrate blockchain with their private blockchains and use DeFi. They need the Bitcoin ETF. It's just too much demand. The cycle's coming. Like it's coming. I'm going to release some small little short clips here today and tomorrow for crypto. So go check out the TikTok or even on the YouTube. I'll have some shorts all about the biggest catalyst on crypto. Okay. I'm going to release those right after the stream. The big catalysts that are coming. They're shorts because it's a lot of information, just little bite sizes, fundamentals, macro, the actual catalyst from there's just different catalysts. The catalyst from Wall Street, right? On the daily SPY chart, we have a bullish pennant pattern. I prefer if we hit 435 so I can go long, but we could break out anytime. Love it, Carbides. Yeah, I agree. I got to get used to putting these on here. All right, sorry, you guys got to remind me, put up the comments so everybody can read them. Yes, bullish pennant. I'm bullish. Hey, look, the reason I'm bullish is not because of a pattern. The pattern does count. The pattern just tells me that there is pressure being built up. But when I see that damn money market, I like to say money market fund, but when I see that RRP liquidity leaving the Fed and coming in the market, that's like the signal, hey, here comes liquidity. Here comes liquidity. Somebody's bullish and they're leaving the Fed to get into the market. So, and if it goes into treasuries, that lowers rates and the market goes higher. So either way, the setup is bullish. Fiscal policy coming online. Student loans ain't going to do much damage. I'm looking to AXA USD. I did short gold at 1928. Okay, you shorted gold. I don't really know much about gold, to be honest with you, other than Bitcoin's going to overtake gold, like on the macro. But I don't really look at gold charts. Gold to me is pretty boring, Yassine. But any way I can help you out, I mean, I'll try. I know this: gold is bullish when the Fed pauses and injects liquidity, more than likely. So you need lower rates for gold to really take off. But if you're just day trading it, it really doesn't matter. You want to see more what central banks are doing, what's the macro and all that stuff. Anyways, I think I'm hitting my end. I can't even talk anymore. Been on for 90 minutes. How to find net liquidity on TradingView. Okay, I'll show you that. It's the last thing here. Last thing here, if you guys don't have any other questions, what you do is you go to indicators on TradingView. Okay, let me throw the question up there. So you go to indicators, click it, right? And just type in Fed net liquidity indicator. Right there. Fed net liquidity indicator. And it should just pop up. I got it starred, so I know. Fed net liquidity indicator. It's not a chart that you go find up here in the plus sign. It's an indicator. Then you can find global net liquidity also, which the Fed liquidity, I always like to say this through, but the Fed net liquidity is basically the Fed's balance sheet, the reverse repo liquidity minus the Treasury general account. What does that mean? Nobody knows. That's why you just say, okay, this is the liquidity coming from the Fed. Number two, global liquidity is going to be the Fed printing money, the PBOC, the Public Bank of China printing money, Japan, and the European central banks. And I think, does this contain, let me see, does it tell me? This might contain, nope, that's all it is. Oh, it is. It is minus RRP minus the TGA. So Fed, Japan, China, the UK. Oh, this is the UK. I didn't realize that. So this is just the UK. Is this old? Yeah, this must be old. Yeah, that's an old chart. So this is plus the ECB. Oh, the ECB too. Yeah. So this is the biggest economies on earth, or the biggest central banks in the world, minus the reverse repo. And it sounds tricky, but minus the reverse repo actually is inverted. That's why I always invert the reverse repo. So minus reverse repo minus the TGA, basically you're adding the reverse repo liquidity leaving the Fed, and you're removing the money from that's leaving going into the Treasury general account. It doesn't matter because the Treasury general account goes to the damn US Treasury so they can spend more money. That's what they're going to do. Debt's only going to go higher over time. You need productive assets like energy storage, like artificial intelligence. You need all these, you need blockchain. This is what people don't get. Blockchain lowers the costs in the financial sector. It lowers costs, it increases efficiencies, it speeds things up. That's what BlackRock wants to do. They're telling you their moves. Crypto is coming. Okay. So, anyways, that's how you do it. I mean, you could watch this video over again to see how to do it anyway. So that's all I got for you guys. You guys stay blessed, get your workout, stay strong. I like McDonald's, just don't eat McDonald's. Stay strong, get better, learn every day. I will say this: go check out Larry Elder on the PBD podcast. Really good take on politics. We're all trying to figure things out here. And I really like that guy, Larry Elder, on the PBD podcast, Patrick B. David podcast. Talks a lot about what's going on. Shout out to Vivek Ramaswamy. I like that guy because we're heading into election year. It's going to get crazy. We're going to see a lot of crazy AI stuff, and stay up to date with your politics. I know people say, I don't care, but guess what? If you're in the US, your vote counts. You want to stay educated on what the hell is going on. Don't be tricked. Don't be fooled. Stay up to date what's going on, and make decisions for yourself. Think for yourself always. I day trade, so I see patterns and I trade patterns. Keeps my head level, keeps me from forming a bias. My unbiased opinion on that SPY is bullish until it breaks that pattern to the downside. Yeah, I agree, 100%. 100%. I mean, if it works for you, it works for you. Anyways, you guys stay blessed, man. I'll catch you guys later. Thank you.